Has the property market bottomed? Should you wait till 2024 to buy property, or should you better just buy it now? And most importantly, which area, which region, and which suburb is going to bounce back from the downturn the most? It's these three questions that I'll be discussing in this episode, full of data. Hopefully I do it justice. My name's PK, and I help people build passive income through the Property Investment Accelerator using data without needing a $15,000 buyer's agent every single time. In this channel, we talk about financial happiness, property, and the economy. So subscribe, give it a thumbs up. Let's go. You might have seen this chart. It's super surprising and super interesting for, I think, most people. This is from Corelogic, and what it shows is that on a rolling 4-week basis, okay, rolling 4-week, you could say average, the property market has actually already bottomed out. No, I'm gonna qualify this and talk about this a little bit more detail, but you can clearly see that in May 2022, which is when interest rates started going up, almost all capital cities, this of course excludes regional, started to go down. This is now on an aggregate basis. Later in the video, I'll go through, more on a deconstructed price bracket basis. But here, at least, you can see that everything went down. And around September 2022, started flatlining through to December 2022. Since that time, property prices have actually started increasing somewhat. Now, that doesn't mean that all of a sudden they're going to continue increasing, because it's in this time period around summer, at the start of the calendar year, that the property market is most buoyant. Okay, it's most buoyant and property prices grow the most. That's what cyclically, seasonally happens, but it does not happen in every downturn. So this is really interesting, that right now, even though we've had the biggest downturn basically in 50 years in property's fallen by almost 10% on aggregate across Australia, we're starting to see that cyclical or seasonality come up in the data despite the headwinds with interest rates, inflation, cost of living, affordability, etc., etc. And you can clearly see that Sydney is spiking the most. Now, of course, this is on a rolling average basis. You can't just take this as gospel and you say Sydney's well out of the woods now, it's going to just go and boom. That is not what I'm saying, but rather I'm just laying the foundation here that right now, guys, property prices are not falling, okay, as you might be attuned to just convincing yourself based on what the media is saying. So what does this mean? When should we buy and where should we buy? Well, the first thing to tell you is that this is Corelogic. Capital city home value changes. Now, weekly change, this is up to date, hot off the press data. Sydney, just in this week, okay, if you analyze this, it's ridiculous numbers. Sydney in this week went up by 0.4%. Okay, Melbourne was flat, which is actually a good thing for Melbourne because it was falling pretty hard. Brisbane up 0.1%, Adelaide flat, Perth up 0.3%, and combined capitals up 0.2%. Now, of course, within these areas or within these cities, for example, Perth, there's areas like around Gosnells that are going up like 20% per annum. Okay, so there's always markets within markets, and also areas in Sydney that are still falling really, really hard on their backside. So there's always markets within markets, but on average, you can see that the capital cities are not going down in value. Regionals, I don't have the data to show you right now, but regionals, especially in New South Wales and Victoria, a lot of them are still a little bit suffering, but they haven't suffered as much as the capital cities. Queensland regional is going up, Adelaide regional, South Australia is going up. Regional WA, not that I recommend you blindly invest there, it's not for everyone, is also going up. Okay, so this data doesn't reflect it, but what we're seeing is both on a weekly and monthly basis, property prices are generally drifting upwards. Whether that's seasonality, I think so. Is that going to continue? Let's talk about that, but that is the fact. So first of all, we need to alter or just adjust or tune our knowledge or our intelligence to say that, guys, if we want to buy a property, if we're going to wait till 2024, then what if this carries on and we're just paying another $100,000, $200,000, maybe $300,000 for the same property? I'm not trying to create FOMO here, but I'm just laying a foundation. Now, I want to deep dive on Queensland, okay? I want to deep dive on not only Queensland, but I also want to deep dive on different price brackets within the Sunshine Coast, Brisbane, and the Gold Coast. And we're going to go to the Gold Coast in a bit more detail, and I'm going to share with you the exact suburb where I think it will be the best buying once this bottom of the market really catapults or bounces. Okay, we're going to get to that towards the end of the video, but let's just really understand how property markets work. We've had a big downturn, right? No one can disagree with that. Sunny Coast, detached housing market. This is Matusik data, fantastic data as always, quarter by quarter, March 22, June 22, September 22, December 22. What this is showing is that if anything is in red, that means that those sub areas are dropping in value. If anything is in blue, those areas are increasing in value. Now, that doesn't mean that they're increasing by 20%, but rather that is the percentage of dwellings in that price bracket. So for example, in September 2022, between 500 and 750k in the Sunshine Coast, there were 20% of dwellings in that price bracket, but the color denotes that it's increasing in value. So despite Sydney crashed more than 10%, Melbourne very similar, you can see that Sunshine Coast between 500 and 750k is actually increasing in value, okay? In September 2022 quarter and the December 22 quarter, and now, you know, with the seasonality, the cyclical nature of property markets, in the summer it's actually going up even more. Here, 750 to 1 million, that's the area that has dropped the most. 1 to 1.5 dropping as well, and then well over 1.5 million. This area, which comprises of 16% of the stock in 22 September and 14% of the stock in December quarter 22, those areas have been falling in value. So, and anyone who says, oh guys, bad time to invest, let's just wait, ride it out. Well, what about these areas which never really fell in value, right? This area, 750 to 1 million, or more importantly, 500 to 750, it never experienced a red. So I just really want you to understand, if you're truly interested in developing your knowledge, there's always markets within markets in terms of suburbs, but also markets within markets in terms of price brackets. Now let's go to Brisbane. Okay, so Brisbane did take a bit of a hit because, like, let's be honest, it went up like 50% in almost like a year and a half. So that's not sustainable. It had to come down, but still, you know, I mean, all my clients, you guys know this, you weren't buying above 750k for sure. We've seen prices on those properties that you bought continue to hold their own and go up in value. 500 to 750k, 29 and 31, this kind of third of the market is blue, which means that it continued to go up in the thick of the downturn. September, December 22 was the steepest gradient down in the property market nationally, driven by Sydney, Melbourne. But here in Brisbane, it's still going up in this price bracket. Now, of course, you can't say that for all parts of Brisbane and those areas above 1 million, you know, for example, Graceville, McGill, other places like that, they drop pretty hard. Of course, there's less properties there, 17% and 16% respectively in the September, December quarters, but those areas definitely dropped. Okay, so it's very interesting that Brisbane has actually had that same patchiness in terms of those areas that have done well and those areas that haven't done well. And I just want to make the point as well that it's not the areas that have done the worst that then automatically bounce and do the best going forward. So people have this kind of inclination, oh look, this suburb in Sydney has gone down 20%, perfect time to buy it because it's going to bounce like a bouncy ball and go back up 20%, let me buy the dip. That's not quite how property works. Where those areas have least fallen in value, those are the ones where, despite the macro headwinds like, you know, inflation, interest rates, those areas have consistently had more demand than supply. Therefore, the downturn has been shallow, or there has not been a downturn. It's those areas that do the best going forward, because when the macro environment changes, when the mood, the sentiment shifts, as we're seeing in the first graph, it's this excess of demand versus supply that really catapults those areas forward. So don't try to find those areas that have fallen the most and say, that's where I'm buying. Try to find those areas where it's fallen the least or hasn't fallen, and those are the areas likely to do well based on short-term microeconomic drivers like supply, like inventory levels, like days on market, etc. And you can see here, month supply in Brisbane, this is obviously aggregate, there is only 6 months supply, you know, as of December 2022, right? So if there was no more houses houses put on for sale, and listings have been coming down. You can see for sale from 15,000 down to 13,000, so supply is coming down. If there was no supply in the next 6 months, all houses that are currently for sale would be sold, and therefore prices would start to go up. Of course, that's an unreasonable scenario. There's always going to be property listed, but that's coming down. Now, the area that I wanted to focus on really acutely was the Gold Coast property market, because, like, guys, you may not know, but the Gold Coast has only fallen in value by 4%. By 4%. Now, this is after an increase of more than 40% in 2021-2022 start. Okay, so like for those people who are like, like steepest and, biggest gradient of interest rate increases, recession and maybe the UK, Eurozone, Canada, US, the world's a tricky place. It's hard to know what's going on. Gold Coast, such strength in the property market that's only fallen by 4%, but has everywhere fallen? Let's have a look. Okay, so these areas between 5 and 750k, those areas have been basically flat. There's not much blue or red, but in December, they did go down. This 10% of the segment went down. You can see Gold Coast is an expensive place. Most of the properties are above 750 or $1 million, 36% and 28% respectively. And it's this biggest segment, or most properties in Gold Coast between 750 and 1 million, this 36% of stock that actually continued to go up. Okay, so it's really the top end of town, over 1.5 million. That is what's caused the drag down in terms of a weighted index on Gold Coast property prices, meaning that on average they've fallen 4%. But actually most of them, just on a volume basis, haven't actually fallen. And I said to you at the start, I'm going to tell you the suburbs to look out for. Guys, like my clients know this, I'm going to tell you for free. Highland Park and Pacific Pines, inland suburbs, still affordable, well under $1 million. Big blocks, they're yielding well above 5, sometimes 6%. These areas, maybe just wait 3 months, maybe just wait 6 months. That chart I showed you before where the housing market bottomed out and the 4-week rolling average was going up. Just follow that for another quarter. If it's not just seasonal, if it actually, continues through to June, guys, Pacific Pine, Highland Park, these areas are affordable. They're the ones that are going to boom or at least increase the most out of anywhere in the Gold Coast. They fall smack bang into this area, $750 to $1 million. They're affordable, well, relatively speaking. And those are my tips, like I promised you at the start of the video. Now, of course, if you are an average income earner, should you be buying something around $1 million or above 750? No. Okay, my clients know this, but for the sake of giving you some free advice, those are my hot tips. Not now, let's watch the data, but when and truly the bottom has occurred in the Gold Coast, that'll be the area that flies. Only 8 months of supply left. For sale or listings have come down from 4,000 to high 3,000s in the previous quarter, and everything is just pointing really, really well. I'm not surprised if we see a March update that a lot of this is blue and listings are down further on month supply, or supply is even more constricted. Now, lastly, for all of you who say that, Gold Coast is, or Brisbane or Sunshine Coast is only booming because of everyone fleeing New South Wales and Victoria and coming up to these regional areas because of COVID and work from home. Guys, here's the data. This is from CBA, Regional Australia Institute, top 5 local government areas, LGAs, by share of total net internal migration to regional Australia. So Sunny and Gold Coast is regional Australia, even though Gold Coast is almost 1 million people, right? From capital cities, okay? From capital cities. This isn't calendar year 22, so we've just finished that off. It's just 3 months ago. 10% or 10.8% share shift, 10.8% migration, positive net internal migration from other parts of Australia. So that migration story is still going. Everyone's like, oh, when companies are requiring you to then get back into the office and people are going to leave the Gold Coast, leave Sunshine Coast, have to be dragged back into their coffins in the corporate Australia, cubicles of high-rise Sydney, Melbourne. That's not really happening, and companies have already started doing that, like last year, 2022. So this is still happening. In fact, in my house right here, this has gone up probably about $300,000, maybe $400,000. I'm in Sorrento in the Gold Coast. This has gone up since I bought it at the start of last year. Why? It's because there's still so many Southerners coming up to regional and capital city Queensland. So I'm big fan, big bullish signals on Queensland. Of course, I'm not saying to just buy there right now, but monitor the data. I think there's other better places to buy right now. But to cap up this video, has the property market bottomed? Looks like it has, but we need to monitor the data so it's not just a seasonal spike into January, February, March. Where should you buy if you were to buy? Where should you have your keen eye on? My money is on the Gold Coast. My money is on places like affordable Middle Ring, Pacific Pines and Highland Park. And should you wait for 2024 to buy a property, or should you buy now? Depends where you are. We've just demonstrated there's markets within markets and also price brackets within price brackets that perform differently. But if you want to buy property, do it now, because prices are increasing across Australia in a lot of parts. Select areas aren't, but you have to follow the data to really figure out which of those areas that are already doing 20% per annum this calendar year 2023. Hopefully that brought you value, guys. I'm not trying to spruik anything. This is just the data as it stands, as it speaks for itself. If you got value, hit the subscribe button, give it a thumbs up, and really to level up and really invest first of all in the 6 inches between your two ears. That is what you should be investing in. I'll leave links below to my podcast, Australian Property Mastery with PK on Spotify, Google and Apple Podcasts, and also my fantastic Facebook community of more than 30,000 people now. That is also called Australian Property Mastery with PK in the comments. Guys, no one cares about your money as much as you do, so invest in yourself first. My name's PK. Catch you later. Bye.